Owning an S&P 500 fund is a very popular choice by many investors, but when it comes to picking which S&P 500 fund to buy, well, there are just so many options out there. And these options are offered by almost all, and if not all, the large investment companies. Although they all pretty much do the same thing and track the same things, there are some key differences between them and some reasons as to why you may want to pick one option over another. I think there's some really important factors to consider before picking which S&P 500 ETF you're actually going to invest into. So we're going to cover those in today's video. And then we'll take a look at which may be the best option for you. I'm going to start by looking at a table that I actually made showing 4 very popular options that you've probably heard many investors talk about. But if you're a UK investor specifically, please hang on till the rest of the video after my table, because I'm going to talk about which options may be best for you. So one thing that you really need to consider is where you're actually based. If you're based in Europe, for example, there are going to be some S&P 500 ETFs that are just not available to you. So these may be the ones that you've heard a lot of the American-based investors on YouTube talk about, like SPY, for example. And it works both ways. The Americans might not be able to get their hands on some of our S&P 500 ETFs like VUSA, Vanguard's offering, and we'll speak about that one much more in a bit. Another point of consideration is the cost, so the ongoing charges, but also on top of this, the currency that fund is actually traded in. And the currency that is traded in could work for you or against you, depending on the exchange rates at the time. But we're going to talk about these 2 points a lot more. So instead of just talking through all of the factors you need to consider in a list, I'm going to instead share this table that I made showing 4 different options, and we can chat through some of the considerations that you may want to think about. But like I said, if you are in the UK, please stick around till after the table, and I'm going to share which 4 main ETFs that track the S&P 500 you'll want to consider. Okay, so here's the table that I made, and up here we've got the ticker symbols of each of the S&P 500 ETFs, and then down the side we've got some key pieces of information about those funds. So if you are interested in investing, you'll definitely recognize at least maybe 2, if not 3 of these. I'm sure you would have heard of VUSA, SPY, and probably VU as well. But yeah, let's just go through them. So we've got the full name here, which I'm not going to read out for all of them, but I thought it would just be easier to put the ticker symbol, because often they're just referred to as that. But for example, the first one, Vanguard S&P 500 ETF. Straight away, you can see that just by its name, who actually offers that ETF. It's a Vanguard ETF, and you can see that for all of these here as well. Got another Vanguard one at the end. The next thing that I've pointed out is whether it's an index fund or an ETF. Now, all of these are ETFs. What I would say is if you're a beginner, don't get too hit up on whether it's an ETF or an index fund. If everything else looks good, so some of the other key points that you'll want to consider, like ongoing charges, like whether you can hold it within your ISA, if it's an income fund or a distributing fund, income or accumulation. Those are probably more important things that you need to consider when you're a beginner. But there are some differences between ETFs and index funds, mainly to do with how you can trade them, when you can actually buy them, and how many whole shares you need to buy in one go. Can you buy fractional shares? Things like that. But I wouldn't worry too much. Stock exchange. So this is pointing out which stock exchange this fund is actually traded on and is available on. This will give you some indication as to whether you can have it where you're based. For example, VUSA is on the London Stock Exchange, so is IUSA, the iShares equivalent, but SPY and VU over here are on the New York Stock Exchange. So if you're a UK investor and you see lots of people on YouTube talking about how they have SPY or VU, you might not be able to get hold of them. But what you probably can get is the UK equivalent, or the European equivalent. Expense ratio. Now, this one is pretty important. Ideally, as investors, we want to profit as much money as we can and keep as much of our investments as we can. We don't want to be giving away money. That defeats the point of investing. You want to make money. So you want as low as an expense ratio as you can get. An expense ratio of 0.07 is really, really low, and that's really good. But to be honest, all of these are super, super good. I wouldn't say that if you see an expense ratio of 0.07, but you know ones like this one, 0.03 exists, you need to panic. You don't need to try and find one, because 0.07, that's pretty good going anyway, so I wouldn't worry too much. What you don't want, however, is an expense ratio of much higher than this. You don't really want one of like 1.2 or something. That would be very, very high. But the expense ratio is just the ongoing charge that you pay, and it's going to be a proportion of the total amount that you have invested. So let's say you have £5,000 invested into VUSA. You are going to pay an ongoing charge of 0.07% of that £5,000. That's how it works. So obviously, the more you have, the more you pay, just naturally, but it's not going to be massive, massive amounts. The next one down is unit price. So this is how much it's going to cost you to buy a complete unit of that fund. So to buy a complete share, if you will. For VUSA, it's currently around £63. Obviously, this is going to change all the time, but I've just put some figures on here when I made this table, just to give you an idea. So £63 for VUSA. So you need to pay £63 to own 1 unit of VUSA. IUSA is 33. These are both in British pounds. And then we swap over to SPY and VU, which are obviously, you can see here, they're much larger amounts. So $388 and $358. Now, this is an important consideration if you have to buy an entire unit. If you can't buy fractional shares of something, then this becomes important. Because clearly, let's say you have £64. No, let's say you have £35 and you want to make an investment and you have to buy a whole unit. You have to buy a whole share. You can't buy fractional shares. You don't have the option to buy VUSA. You only have the option to buy IUSA. Is that how you say it? IUSA, by the way. I'm just going to call it that. The iShares equivalent. So it is a consideration there. Now, size, so assets under management. You'll often see this put as AUM. This is basically the total value of the investments managed, if that makes sense. So you'll see here, VUSA, 25.8 billion, then 11 billion. And you can see these ones. This one is absolutely massive. All of these are really, really big. For beginner investors, again, I wouldn't get too hit up about these numbers. I wouldn't think that you need one that's the biggest to get the most out of it. These are going to all have exactly what you need if you are looking for an S&P 500 ETF. You don't need to worry too much. But maybe some more experienced investors would care about this a little bit more. But it's an interesting thing to know anyway. Next down, we've got UK question mark. This just means, can you, if you're an investor based in the UK, have this ETF? Like we said earlier, it's going to depend what stock exchange they're on and whether the platform that you have offers it. But I've just put the answer very, very simply here. Managed by is just the company, the investment company that actually look after that fund. It's their fund. So you've got Vanguard for the two end ones here. And these are going to be the UK and the US equivalent to each other, basically. And then you've got BlackRock. I put iShares up here, but you can use them interchangeably. And then you've got Spider, SPDR. I like to put Spider in brackets just to remind me how to say it. I think that's a fun one to say. Next down, dividends. So as you can see, all of these ETFs here are dividend paying ETFs. This means that by having these in your portfolio, they will pay you for owning those ETFs. They'll pay you for having them. They'll pay you a dividend. This isn't to say that you can't get S&P 500 ETFs that are accumulating instead of a distributing or an income fund, but we'll get onto that in a bit. So let's just look at these. So VUSA is a quarterly paying dividend ETF. That means 4 times a year you will get a payment for having this ETF. And the yield at the moment sits at 1.7%. Now 1.7, that's the highest on this table, and that is a pretty good yield for an ETF such as this one. It's not really a high dividend ETF as such. You're not really going to be having this if you want the biggest dividends necessarily. It's one that I have in my own ISA, and my ISA tends to be towards dividend paying companies, dividend funds. But I absolutely love VUSA. It's one of my absolute favourites, and it's a pretty good dividend payer. I've got some nice dividends from it. Moving along, you can see that these are all quarterly payers, and their yields respectively are here as well. Start date. Now, you may think, why on earth is start date important? But there's 2 reasons that the start date may be important. One, because the longer a fund has been around, the more time it's gone on for. So therefore, you can say it's a bit more trustworthy and it's going to continue being a fund. It's going to continue existing. And the second reason is obviously The longer that something has been happening for, the more data behind it. So you can see more past performance information, which is definitely something that, I look at when deciding whether to invest into a fund and a stock. It's obviously past performance doesn't mean future performance. It's not indicative of future performance, but it is definitely something that we look at for sure. So you can see here that the newest fund is actually VUSA, been around since 2012. And the oldest, the old boy on the block here, is SPY since 1993. All of those four that I just showed you are distributing, so income-based funds. If you know that you want an S&P 500 ETF, but you don't want it to be a distributing fund, you want it to be an accumulating fund, then you can definitely get hold of those as well. Don't worry, these aren't the only options. You may wonder why you would want a distributing over an accumulating fund. There are some key differences. I won't get into it in this video, but basically, very, very short overview. With a distributing fund, they're going to pay you a dividend. With that dividend, it comes into your account and then you decide where it goes. You can either take it out as cash in your pocket, you can put it back into the same fund. So if it's come from VUSA, you can put it back into VUSA and buy more. Or you can actually say, okay, it's paid me a dividend, but I want to put that dividend to work elsewhere. I want to go and buy Tesla stock with it, for example. You get freedom, but obviously you've got to keep up with that and you've got to remember to do that. It's not passive in that sense. You actually have to manage that yourself. With accumulation funds, some people prefer this type of fund just because it's so easy and so passive. So what happens is when the fund pays a dividend, you don't even see that. You don't even know about that. It uses that dividend to then reinvest into the fund that it paid dividends from. So if, for example, you got a dividend, if you have an accumulation fund, let's say you own an S&P 500 accumulation fund. If that then pays you a dividend, it will just automatically get reinvested and buy you more of that particular fund. So you don't even see it. So obviously some people like the real passiveness of that, but it's completely up to you. So if you're actually based in the UK, I would say there are two main investment companies that pretty much are going to offer everything that you want from an S&P 500 ETF. So I would say the two that you need to look at are typically Vanguard and iShares. There are obviously many other options out there. There are many companies that are going to offer S&P 500 ETFs. But these are big ones, these are trusted ones, and you may come across other ones that aren't like fully UK reporting, or they might not represent the full S&P 500. They may just represent a subset of it. So they may look into tech companies in the S&P 500, so like a subdivision of the total. So that's something to consider. But definitely if you're in the UK, you want a UK reporting fund. That's quite important for regulatory reasons. Anyway, my audience on this channel is quite heavily UK based. So I'm going to talk about the four options that I would suggest looking at if you are looking for an S&P 500 ETF and you're from the UK. So the first one, and perhaps the most popular one, this is the one that I have. I don't actually have this because I knew it was the best or the most popular one. It's literally because I set up my ISA with Vanguard when I started investing, and I knew I wanted an S&P 500 fund because I heard loads of people speaking about it. So I just picked the one that Vanguard has. Turns out now looking back that was a pretty good choice, and now I own VUSA and I continually invest into that. That gave it away. So the first one that I would look at is VUSA. So ticker symbol VUSA, and that's obviously Vanguard's offering. This one this one is a distributing fund, meaning that that's going to pay you dividends. The next one is VUAG. Now, this one is also a Vanguard fund, S&P 500, but this one is an accumulating fund. So they're going to just reinvest those dividends for you. You don't need to talk about it. But think about it. Weirdly enough, VUAG is not actually available on Vanguard's UK website. Really weirdly, Vanguard don't have their own fund. If you own this fund or you've ever owned this fund, do let me know if you managed to ever purchase it off of Vanguard's UK website ever, or whether this is a more recent change and they've taken it off, because I did find that really weird. But you can get this on other platforms anyway, so you don't have to get it from Vanguard. But if you are on Vanguard's website, you have an ISA with Vanguard and you do want an accumulating version, you don't want VUSA and you can't get hold of VUAG, there is another option called Vanguard US Equity Index. And with this one, you can get either the distributing version or the accumulating version. Basically, what this fund is it's not exactly the same as an S&P 500 ETF like VUSA. It's an equity index. So you're getting all of the S&P 500 plus about 3,000 more mid and small cap US companies. So by value, it's about 75% S&P 500, but you're getting those other offerings thrown in there as well. So something to consider if you do like the look of that one. The third option is IUSA, which we spoke about. This is distributing, it's testing my spelling this, distributing, and it's BlackRock iShares option. The last one is the sister of this fund. So just like we saw VUSA and VUAG being the same fund, but in distributing or accumulating, IUSA is distributing, whereas CSP1, this is really testing my acronym memory, is an accumulating fund. So those are four options that I would say are probably the most prominent, the most popular options in the UK for an S&P 500 ETF. Like I was saying earlier, you need to also consider the currency that the fund is in. Is it in dollars? Is it in pounds? Generally speaking, if you're a UK investor, you'll only be able to buy funds that are available to UK investors, but quite often you'll be able to get these funds either in dollars or in pounds. And if you're purchasing a fund that is in dollars, so it's traded in dollars, then obviously you're going to need to think about what that will mean when you purchase, when you withdraw money and that needs to be transferred back to pounds. And equally it works the other way when you actually purchase the fund. So the exchange rate will come into play a little bit, but what I would say is if you're a long-term investor, I wouldn't worry too much. Over the long haul, I don't think it matters a great deal. Maybe just stick to pounds if you're in the UK, just because it's easier for you. But it's a consideration there for sure. Some investors actually decide to hold ETFs both in pounds and in US dollars. And I guess this means that they'll just have more liquidity. So if the pound is stronger or the dollar is stronger, they'll be able to decide which one to actually buy more of, or if they're withdrawing money, which one to withdraw from. Or also just by having both of these, the exchange rates kind of balance each other out over time. But like I said, won't worry too much if you're one, a beginner, or two, a long-term investor. So all of those four that I just showed you are all very cheap. They all have an ongoing charge of 0.07%. So if you're trying to decide between which one to buy out of these four, the ongoing charge is probably not going to be a key consideration for you, just because they're all very cheap and they're all exactly the same. However, the spread of these four funds is different. The spread is basically the difference in price that an investor can buy and sell the ETF for. Basically, the smaller the spread, the better for the investor, because they're not going to lose as much money. So VUSA's indicative spread is 0.04, so that's very low. VUAG is slightly higher at 0.16%. IUSA is 0.01, so extremely small. However, I couldn't really find this very clearly and very definitively online. So if you know what it is, please do let people know in the comments below, because it may be helpful to someone out there. And CSP1 is 0.08%. So it seems to be that for accumulating ETFs, the spread will be higher, whereas for distributing, it seems to be lower. I'm not too sure why that is, whether that's just happened in this case or whether that is a known thing out there. If you are a very knowledgeable investor, please let me know if there's a reason behind that, because I'm very interested. So just whilst we're on the conversation of costs when it comes to these ETFs, if you're in the UK, please know that the most tax efficient and cost effective way to hold any of these ETFs is going to be within an ISA. So that is going to be a tax-free ISA of up to £20,000 a year. And obviously, if you're in America or wherever you are, there's probably going to be the equivalent for you. As you can see just from this video, there are so many options out there available for you. If you're getting really overwhelmed, but you know you want to have the S&P 500 in your portfolio, then what I would say is firstly, have a look at your ISA or your equivalent wherever you are, and figure out what ones you can get through the platform that you're on inside your ISA. That's the first thing. That will help narrow it down a little bit. Like I said, if you're on Vanguard, you've got the Vanguard offerings only. That's going to narrow it down a lot for you. Then I would start looking at, does it represent the S&P 500 completely? Because if that's important to you, you're going to want to make sure of that. After that, have a look at the ongoing charges, because ideally you want them to be as small as possible. After this, you'll probably be left with a pretty short list compared to what you started with. So hopefully you'll then be able to narrow it down even more and find the best one for you. And importantly, whether it's an accumulating fund or an income-based fund, because investors are definitely going to have their preference with that as well. I really hope this video was helpful. Please give it a like, subscribe to the channel, let me know any other videos like this that you want to see, and I'll be back very soon with another video.